Officially, everybody, the last space of 2025. It is time for Rujira. I hope you guys are pumped up. I've had 14 cups of coffee. I've had a little cocaine. I am ready to party, you guys. It is only 8 in the morning. Are you guys ready? I am ready. Let's get this party on the road here. Let me join as co-host. Yeehaw. Okay, guys. Hello, everyone. Let's get this intro going. THORChain is the first decentralized exchange in the world to swap real Bitcoin. And now you can use every Bitcoin wallet in the world and you don't have to connect it to a website. Same with Ethereum, XRP, BNB, Tron, Doge, and more. Eventually, you'll be able to swap any token from any wallet. THORChain is turning into a full layer 1 liquidity engine where apps can be built on top of it. And speaking of apps, we're going to be talking about Rujira today, the best app layer in the world. This app layer unlocks lending, perps, Bitcoin-backed stablecoins, token launchpad, NFTs, prediction markets, and so much more. THORChain isn't just a decentralized exchange. It's becoming the protocol of pure uncensorable liquidity. Swapping on THORChain is permissionless. There is no KYC. Anyone in the world can use it. To swap on THORChain, go to thorchain.org, click on swap. New features and functionality will be added to the site over the next few months, especially the Rujiran primitives that we're going to be talking about, guys. So make sure you guys share this space to anyone and everyone. THORChain's token is called Rune. That is spelled R-U-N-E. You don't need to buy or hold Rune to place a swap on THORChain, but the fees deducted from your swap are used to buy Rune. And this is the Rune that is the yield that goes to liquidity pools and nodes. There are no block rewards on THORChain. 100% of the yield is real. THORChain is deflationary with 5% of the revenue burned. If you hold Rune on a centralized exchange, you should withdraw into self-custody because these tokens can be used to short sell Rune and drive the price down. And once in self-custody, you guys, look into bonding your Rune to a node to earn some yield to help secure the network. A really great site is runebond.com. Really easy. All you have to do is find a node, request a whitelist, and bond your Rune. And to my Rujiran friends, when B-Rune becomes live, that will be supported immediately, or at least as soon as possible. Little shout out to the community here. We want to increase the amount of node operators that we have to further decentralize the network, because when we're going to be winning, we're going to be making lots of enemies. So we want to decentralize the network. If you or know somebody has some technical skill, new Kubernetes, let's make you a node operator, right? So reach out to RuneBond or Kenton or myself. It does not matter. We have plenty of resources to get you trained up so you can become a node operator to further decentralized network. We will train you. It only makes THORChain stronger. So please reach out. THORChain has another token called TCY. This token is like a preferred stock where 10% of the protocol's revenue goes to these token holders. If you deposited crypto into savers or took out a loan on THORChain, make sure to claim your TCY tokens so you can start collecting this yield. Anyone can buy the TCY token as well on thorchain.org. There's a THORChain community Discord and Telegram. You can join to learn all about THORChain and make friends. To find the links, go to @THORcommunity. That's @THOR community account on X. You guys, this space is going to be a special one. It'll be geared towards anyone in their THORChain journey or your Rujira journey, or maybe both journeys. Whether you're new or a veteran, there will be something for you today on space. I hope you guys are so excited. This is the last space of the year, and no one better to do it with than with Rujira, something that I am so unbelievably excited about, and I hope all of you guys are excited as well. I'm going to go ahead and kick it to Kenton. Kenton, how you doing, buddy?
I'm good, man. Thank you. Yeah, looking forward to our last space of the year. So a little quick update with the swap interface. I think it's all done being migrated over to THORChain servers. And so some of you noticed that the site was down for several hours. That was DNS settings being reset and everything. But that should all be good now. I actually didn't look today, but last I looked, the site was up. It's working. But then with everything moving around, something happened with the docs page. The like the normie docs page and then developer docs page. Again, something to do with the DNS settings, I think. I don't know, but the people know about it. They're trying to fix it. And I also forgot to, on Thursday, I forgot to mention, I have been talking to Chainalysis and Elliptic and some other wallet screening providers. So that is, excuse me, excuse me, sorry. So that is in the works. And with Christmas, you guys know how things go. So I doubt anything will be decided in the next 2 weeks. But hopefully in the new year, we can make a decision pretty quick on which to use. And then I was just want to just kind of throw us out there too that I was reflecting on our conversation on Thursday. Boone asked about burning, most or part of the reserve. Um, and I was kind of against it in that I was thinking all about like my response. And I'm like, maybe I'm wrong. Um, Maybe it is a good idea to burn part of the reserve or most of it or even all of it, and get the total supply of rune down. Because like, Bitcoin, I was, rune isn't a store of value like Bitcoin, right? Rune, THORChain is more like a business, and businesses, you know, they um they increase their number of shares outstanding all the time. Like it's not a big deal. It's not crazy. It's not, so if we ever get to the point where we need to like add more to the reserve or add more tokens to Rune, like it's really not the end of the world. So maybe there's some merit to people saying we should do that. Man, we don't have to talk about it. I just wanted to just throw it out there. I was thinking about it. Maybe in the new year we can start talking about it again. And that's it for me.
Thank you, Kenton. Yeah, everyone loves your updates, man. And very happy here. I hope you guys are surprised. We have two wonderful people with us. We have Pragmatic Monkey, everyone's Frenchman. And then we also have Code Hans. I'll go ahead and kick it to you, Pragmatic Monkey. How you doing? Comment ça va?
Ça va bien, merci, mon ami. All good, really. Glad to be here with you guys to close up the year and speak a bit about what we have in the pipe for Rujira for next year.
Yes, absolutely. And I know Code Hans, I'm going to kick it to you. You have been working so hard. It's been such a joy watching your updates. It's like a form of it's like a mild addiction for me because I know you're really baking over there. So how you doing, man?
Oh, great. And I just want to say that energy, that intro, this is amazing. Yeah, two good vibes here. It's honestly like it's been what now, 12, 13 months since this whole thing kicked off in August last year. And it's, we've been through it all together, haven't we? But it's coming together now. I am, just these pieces are falling into place and things are moving forward and lending's live, credit accounts are live. The trading wheels come off in January. It's borrowing against native Bitcoin, borrowing against native ETH, and all these like incredible things that just until this partnership was created, until we built these products, just weren't possible. So yeah, it's coming together, and I'm incredibly excited.
Oh, dude, likewise, me too, man. And your energy, by the way, I mean, how much you're coding. You and Chad Barraford are just code shipping machines, man. I joke all the time. I wish you guys could make some children because this is insane, guys. Please remember, this space, it is open. So if you guys have any questions, please put it in the Rujira Telegram or the THORChain Telegram. I'll try to monitor both. Because I know you guys always have questions. But Kenton, did you want to kick it off with anything regarding to Pragmatic Monkey or Kenton?
Sure. Yeah, maybe just make a quick comment. And in my mind, App Layer is kind of like Hans and Chad's baby, right? Like, would it be possible without the base layer code and then now Hans code, right? So that is their little baby.
I tell you, I remember, I said this before, but I remember when I first started building in the like cosmizing execution layer into the Thor node code and looking at the kind of like just basic kind of like they're called structs or whatever, it doesn't really matter, but you see these core components of that base layer which allows you to ingest an Ethereum transaction, ingest a Bitcoin transaction. You're like, well, this is just one code base. So suddenly I now have access to all of these chains in the code that I'm writing. And it was right from that moment, I was like, this is going to be something special. And the platform that has been built here, that Chad built, that all you guys built, is just it's just on another level. And we get to play in this sound pit. It's incredible.
That's awesome. So something I've been thinking about is like I feel like the first, I guess like the second quarter of this year, like there's a lot of attention on Rujira and what you guys are doing and when things are going live. and then and I feel like in the third and fourth quarter here, it's quieted down a bit, and maybe it's just me, what I'm looking at. And I'm not saying this in a negative way. Like in my mind, it's like, okay, you guys have been down, you've had your heads down, and you're building and you're shipping, and like you can just kind of focus on coding basically, getting things done. Is that am I reading this right? Have you guys like been able to make a lot of progress in the last, say, 6 months, compared to, say, the first 6 months?
Yeah, I think it's fair to say that the kind of when we started off, in August last year, and there was a process, right? And we all kind of had to get to know each other, I guess, to a degree, and getting the CosmWasm layer merged into the Thor node code took, I think, 3 months, and then January and February was THORChain and all that kind of stuff. So it's just been a progress, and now we're in a place where actually I think we're all in the same tent, pissing out, right? And all on the same team, and we kind of have this mandate and this mission now, and we have the freedom and the ability to keep moving. And the other piece of this is that you see it a lot in the space that pre-launch projects get more hype and more attention, and because something pre-launch can be anything, right? It could be a machine that turns water into gold, as long as you write it in a white paper. But as soon as you actually put that code down and ship something, you have to test your metal, and we are now more at that phase. Okay, market's depressed, right? It's going to do what it's going to do, but we are now delivering on the promises and actually kind of shipping and building these features. And it's the hype isn't the important thing. It's the delivery, and it's the TVL, and it's the revenue, and it's the usage, and it's the users. It's all those kind of actual important metrics.
So maybe you just help a bit of a recap. So my understanding is the linchpin, or like the final puzzle piece to get going on app layer, was these credit accounts. Am I right? And if so, can you just kind of walk us through why it was so important to get that done first?
This is a whole spaces in itself, credit accounts. Yeah. So where do we start with this? So the kind of I guess you start with sort of like kind of the what I'm going to like in quotes traditional lending markets, where you have a smart contract, you deploy a smart contract, and this is what we have in Rujira, is where you have one smart contract, and that allows you to deposit Bitcoin, or wrap BTC as it was then, and you can borrow USDC against it. So you have this kind of isolated, clearly defined market with clear liquidation routes, which is fine. It worked really well, right? Like it was one of our biggest products, massive TVL, loads of usage. But it's very constrained, right? You can't have multi-collateral, you can't have multi-debt, you can't have cross-margin, all that kind of stuff. And at the same time, we were kind of looking at a design for a perpetual contract, like perps, basically. And the way that perps are stable against the spot market is because people arbitrage funding rates against the spot market. And the whole point, everything that we're building with Rujira it had to be connected. It had to be kind of this unified, interconnected design. And if something kind of was out on its own, which the design we had for perps sort of was, it didn't feel right. And so that I just kind of I kick it back and forward loads. And when we started rethinking, and then we had the opportunity to reimagine what this whole kind of debt market and credit market looked like on Rujira, credit accounts just started to make much more sense. So credit accounts are a much more generalized interpretation of borrowing and lending. So you just have effectively an address, right? The same way that you have a wallet address, a credit account is an address that is your address, but you can only control it in certain ways. So you can borrow money against it as long as you have enough margin or enough collateral on that account. But that collateral can be anything, and you can do anything. So like if somebody creates a new protocol, I can now use my credit account contract with funds on it that I borrowed from a lending market, and I can now interact with a new protocol. So I can deposit into an LP, like base layer LP or an app layer LP, or I can open a purpose position, or I can create a limit order, and all these things count as collateral, and they'll count as assets owned by the credit account. And so suddenly this was like that kind of sort of eureka moment where I can now open a limit order or hold spot collateral from the spot market, and I can also open a perps position, and those are both owned by the same credit account. And so suddenly you have this bridge between your perps market and your spot market. And it's just, and I remember it was incredible. And so like, well, this is it now. This is how you create this kind of like interconnected, unified, beautiful DeFi ecosystem, where the rules are open source. You can verify them. It's fair. We have fair liquidations. You can encode your liquidation routes into your credit account. So whoever is executing your liquidation, if it comes to that, doesn't get to kind of benefit from it. It's handed back to the community, and you get the best execution price. All these kind of things. So like like I said, there's a whole spaces we could do on credit accounts and how it creates this link between the spot market and the purpose market and stable coins as well. Like, we can come on to that, but stable coins are key to all of this. But I'm gonna stop now. I'm rambling.
No, that's great. So like, is this an example of why you guys feel it's important to kind of keep everything in-house, like with Rujira? Like instead of, before I was saying there should be competing teams, competing smart contracts and whatnot, but having you guys kind of curate the whole thing and do it all in-house,
so
you can make your credit accounts and everything all work together.
Yeah, I mean,
it'll be that much.
I don't think it's a case of having everything in-house, right? Like when we talk about everything, it's when you look at kind of like the history of DeFi and the way that these protocols have been launched and created, is we started in 2016, late 2015, 2016 with Ethereum. First time you can actually program this internet money, and it was all very unknown, and people were kind of like testing what was possible. And Uniswap was launched, and Aave was launched, and then MakerDAO was launched, and blah blah blah. And they're all kind of isolated products, but they all have to work together. Like there are a few key primitives for a successful DeFi platform that are required, and in order for it to be effective, they have to operate together. And broadly speaking, it's trading and credit. Like those are the two key pieces, right? I need to be able to exchange something, and I need to be able to leverage myself with it. And we're so used to those being individual products that when you say like, oh, we're just actually going to do all this together in one piece, you think that's everything. There's so much more that can be done. I think a launchpad it uses it, but it's separate, right? It's not part of this interconnected ecosystem. Obviously, we're building one, but it's like if you have competing dexes, competing lending markets, competing blah blah blah, it's not that like the capital fragments or the liquidity fragments. It's more that you don't get this really nice tight integration, and everything suffers because of it.
Yeah, I get it.
So maybe on that, Kenton, I think it's really we are building the core, like the fundamental pieces, and then there will be plenty of space for other teams to come and compose those pieces to build value-added product on top of it. And that's really where I think we can onboard more teams building more products, like credit account, for example. Once you combine it with the other primitive, it's open a very wide variety of things you can do. Hans was touching on, of course, CDP loans, but also stable coins, futures. So we'll do those core primitives, but then once you have all of that together, combined with the trading tools, you can build a sort of strategy or things we cannot even think of. And that's still accrue value to THORChain and to Rujira stackers because it's built on top of this primitive. And that's where I think we will start onboarding. But it was really a process of first we have to get those bases done. I think that's also a bit of a mistake or like a reason why it took certain things took longer than expected. And not to blame anyone here, but it's just like a matter of our history. We had a lot of builders that came together with us because, we had a chain before, and GP was like pushing out to try to onboard a lot of builders. And initially, this was not the right move. Like it's slowed us down a lot from building the score primitive by just effectively having to instead try to create other people problem while the key pieces were on there. And And now, like with a lot of cleaning of that, we are now focusing on those core pieces, and then it will be a time to invite other team to build on top of those.
And when those other teams come in, it's accretive. Like you want, if I'm a team working on top of these primitives and building something, and another team comes in, it's not like it's necessarily competition. It's like we want as many teams building on top of these primitives as possible, because the more, it's just a giant funnel of liquidity into the same primitives, right? So we're all working on the same ones. We're making it all stronger for each other, right?
Exactly. And then when you combine that with the referral and affiliate program we have in mind, we also give a way for those teams to monetize by taking a share of the protocol revenue. I mean, at least conceptually for now, it's not coded yet, but that's also very powerful because people can even like spin out different product wallets, front ends, or just packaging stuff differently, and without increasing the cost for the end user, just offer access to all those primitives and build new product, new businesses on top of it, and do it in a way where they have a very easy mean to monetize it, and without requiring to bootstrap their own liquidity and rebuild all those complicated stuff and audit and other things. Like they will have like strong, robust primitive. They can just compose them on top and monetize them very easily. So it's all like little by little we add those different piece, and then we get there.
Nice. Patriot, do you want to jump in? Did you have?
One thing I want to shout to the audience, please, guys, if you have any questions at all, please put them in the Telegram. And with the Rujira and a THORChain, I'm paying attention. I did manage to answer one by ourselves, but yeah, I'm really excited. And that was the one thing that was hard to figure out in the beginning. This whole new app layer, it's completely new, the teams, but I really think we've slotted in nicely, and we have really for the first time, and it's crazy to say this because essentially Rujira and THORChain are essentially two ecosystems that have blended, but we really have, I feel, a cohesive vision for the future. And so now we're just like cocked, locked, and ready to rock, right? So super exciting. So I'll probably kick it to Code. Hans, like what's got you very excited for Q1 of next year?
Aside from Q1, we get to scale now. Credit accounts are out. You'll be able to borrow against your native Bitcoin, borrow against your native ETH, all these kind of like the things that just haven't been possible until now, until this partnership happened, and now we get to scale it. And as far as like a product point of view goes, we have these credit accounts. The credit accounts draw down from lending vaults, right? So you deposit your USDC or USDT into a lending vault, and you pay an interest rate based on the utilization of that vault. Same way that Aave does, all that kind of stuff. The next primitive that we introduced to this ecosystem is what we call a mint vault. So nobody deposits into this vault, it just mints a token, and you can borrow this token against your collateral, which is the exact same model we had for USK on Rujira. It's the exact same model that DAI works, or whatever it's called now. And this is our stablecoin, right? It's a synthetic asset pegged to $1, and your interest rate is dynamic based on supply and demand. And so this mint vault, first of all, initially allows the synthetic dollar, which because of THORChain's technology, we can now export, right? So the real value in a stablecoin is that whenever it integrates with another protocol, it's paired with another token on Uniswap, or you can borrow it on Aave, or like whatever, right? Or across any of the connected chains, it's like a yield Hoover. So you charge 5% to borrow it or mint it, and you can make 8% on another protocol somewhere else. And so that 5% is like hoovering up yield from every single blockchain the THORChain's connected to, and paying that to Rune and Ruji stakers. And that is just, for me, that's just an incredible thing. And the layer on top of that is actually what a stablecoin is, right? You mint a synthetic dollar, and it's a notional long position, right? You're like saying, actually, I'm going to borrow against my Bitcoin and my ETH because I think price is going to go up. If you think price is going to go down, you're not going to borrow against it, right? And so you flip that the other way around, and you say, right, I actually want to take a notional short position, so I'm going to create a synthetic Bitcoin. So now I have a synthetic Bitcoin, which is a bit like it works the same way, right? Like you're pegging the value of your synthetic Bitcoin to the value of one Bitcoin with supply and demand rules. So suddenly I have a synthetic dollar and a synthetic Bitcoin, and I can trade those two together, and I can trade them on a Rujira order book. And what I'm doing there, suddenly, like lo and behold, you have a perps market, because now your counterparty isn't somebody that's holding spot. It's somebody else that is playing in the same game. They're taking a leverage position. They've margined it with what actually, because of credit accounts, they've margined their position in whatever they want to margin it in, dollars or Bitcoin or whatever. And all of this just comes from a mint vault, which is I say notionally trivial. It's not a complicated contract to write. So this, like, as far as product goes, this is what I'm very excited about this year or next year.
And Hans, just to make sure I'm clear and everybody else, the protocol isn't taking on any counterparty risk, right?
Absolutely none.
It's the users, right? This is like a closed system. For every long, there's a short. It is
so
a
this is the point of having kind of like an isolated futures market, right? Is that when somebody wins and somebody loses, it gets sold or bought across the other side of the market, and you're kind of willingly participating in this because you are, you put the liquidity on that other side of the market. Like if you just want to be safe and stable, you trade on the spot market and feel like, okay, right, no, I'm willing to participate in this higher stakes game, higher leverage game. I can now take my synthetic tokens. I can trade my synthetic tokens against other synthetic tokens, which ultimately have value because I can close my position and take my profit or whatever. But it's you're playing on a different field.
So in theory, if like say this lending market really takes off, the perps market really takes off, it becomes huge, doing like billions in volume and collateral, whatever. And then for whatever reason, it all goes to zero. All the collateral is withdrawn. All the volume in the perp stack is gone. It doesn't affect THORChain in that it just misses out on those fees.
No,
Otherwise,
absolutely not.
fine. Everything's fine.
The important thing is that we parameterize and configure these protocols so that, as far as the protocol is concerned, it is delta neutral, right? It doesn't care if prices go up or down. Like, we've got enough people betting long, enough people betting short that if everybody wins, it's all zero. Or if we're we're not talking about kind of sort of a reflexive design like Goldflow was or whatever. This is built from years of learnings and blow ups and being in them and part of them and whatever, and making sure we get things right this time.
No, that's great. It's what it should be. Absolutely. THORChain is just the middleman, right? We're just facilitating the buyers and the sellers, right? We're just in the middle taking a fee. And that's that's amazing. Yeah.
Absolutely.
Awesome. Patriot, did you want to?
I do have a question. A Pragmatic Monkey or Code Hans can take this, but I have a question from TXTX, and they want to just know approximately when staking rewards will go live on the Rujira app layer. Pragmatic Monkey, do you want to try and take that one, or?
I can take it here. So my view, like it's a matter of priorities. That's really the thing. Currently, the fees we are generating are not that big. If we enable it now, it will be one big distribution and then very little revenue. So, and it still requires some work to make some change to the revenue converter and do a lot of reparametrization of protocols to make it work. So it's a question of do we spend Code Hans and other devs time doing that, or do we spend this time doing a revenue generating product first? And in my view, it's a no-brainer that we should first focus on the revenue, creating the tools that allow us to generate revenue rather than just doing this one of distribution and then having very, very little cash flow for stackers.
Yeah, sounds good to me. And just so you guys know, I will ask them pretty much any question except if it's been double material. Okay. I do have another question. This is from Max Power. He wants to know, when Orca, the most exciting part?
It's coming very soon. I always posted a screenshot the other day, but it's way too early to be sharing those things. Very rough and ready. But the thing so back on Rujira, actually on as a layer one, and also when we were back on Terra, Orca was kind of this like isolated market from the more general spot market, right? From a Terra swap or from whatever exchange that you would use. And so the opportunities there were massive, right? They were kind of like exploitatively massive. I think you could achieve up to a 30% discount if you kind of noticed that something was about to be liquidated and nobody else was looking at it, which it's great, right? Like it was fun, but it's not really the best design for a system because it's not great for the guy getting liquidated. They're not going to come back again, right? They're not going to be like, okay, yeah, fine, I'll take out another loan because I might lose 30% of my collateral if I have to be liquidated. So the new design now allows us to liquidate through the spot market because the secondary reason, well, actually the primary reason for that is because the spot market is now backed by THORChain's pools. So THORChain provides a settlement, provides the 120, 130 million, whatever it is, of liquidity to settle these liquidations. So what Orca is going to turn into and what's going to become is this kind of like turbocharged liquidation hunting engine, right? So it doesn't give you like exclusive access anymore for 30% discount because that's unfair and exploitative. But what it will give you is it will show you what is at risk on Rujira, and it will compare that to the wider market, to the external market, because that matters, right? Like if the price is approaching some kind of critical price for longs or shorts, then you're going to want to know about that because it's going to affect what you're going to liquidate on Rudy. It'll show you like what the lending limits are, what the borrow limits are, all the like the market dynamics, the recent liquidations, the individual accounts that are at risk, like all these kind of. It's going to be like a turbocharged like liquidation hunting dashboard, and it's great.
Fantastic. Go ahead, Kennedy.
I say, can we zoom out a bit? Maybe I think why this matter is important. And this ties into 10/10, October 10th, right? And all the auto liquidations that happened then. Can you maybe speak to that, Hans?
Yeah, I mean, this is it, right? Like I posted about this the other day that when we started Koji, like I've been out of the crypto space for a few years because it was incredible. Like I remember the first time I read about Ethereum and you know, I opened my laptop and I downloaded Geth and started mining ETH. But like you say, it's like permissionless participationless thing, and it's incredible. And I was like, we can all be part of this. And then fucking ICO happened, and you get like EOS who raised God knows how many billions and delivered basically nothing. Like, well, it switched me off from the whole thing. And so when we founded Koji in 2021, I was just like, we have to build something that is meaningful, that is valuable, and that is like true to these values that, like, you know, community ownership, community ownership and doing the right thing by people as best we can. So 10/10 was like it was like the antithesis of that again. It's like, you know, suddenly you have these institutions who don't fuck up, and suddenly like everyone's all getting liquidated, and nobody really knows why they've been liquidated or where that money's gone or who's profited from it, and it's just horrible, right? And we have this opportunity now to build a system that is open source and transparent and built for the people that are using it. Like I was just saying, like you don't want this kind of like extractive, manipulative 30% discount because you got on the wrong side of that trade, right? Like all you really need to do is cover the solvency of the system. You don't have to like down somebody for 30%. So this is I don't know, I'm rambling again. This is
let me, if you don't mind, just me jumping in. So like what I was referring to on 10/10 was like Binance and Hyperliquid, well, and other exchanges, but they got the most attention, is that they made money on liquidating people's positions, and so it creates
all
a perverse,
that money.
okay, so it creates a perverse incentive where the exchange is actually working against their users, and whereas you solve that problem on app layer with your version of perps, is that yes, there are liquidations, but the protocol doesn't benefit from that. The users can participate in those liquidations.
Two pieces here. The users can participate in those liquidations. If we have what we call Oracle /tracking orders, which allow you to basically say, I am willing to buy Bitcoin at 3% below the market price. And your order will move every single block. And it will always be 3% below what the enshrined oracle says the price of Bitcoin is. And so you can participate in these liquidations. But the other piece here, the other side of it is for the borrowers. And when you create a credit account, let's say, like a simple example here, you want to borrow USDC against your Bitcoin, you can determine, you say, if you have to liquidate my account, you must try this order book first. Like it's a specific contract, and you must swap it on this order book first. And assuming that's fine, and my account is now in good health after you've done that, you can't do anything else. So you can define exactly how somebody's allowed to liquidate your account, rather than it being this kind of black box of, hey, I've stumped up my margin, I put $1,000 here, and now I've got some kind of leverage, and then suddenly like, oh, I've now been liquidated and it's all gone, and I'm not sure why or where or who to.
And this is one of the advantages of THORChain's liquidity pools, is that in theory, it like you can't have like a flash crash of a token price going to 1 cent and back up. It's basically impossible with the liquidity pool, right?
So the credit accounts are valued based on the enshrined oracle, which it uses THORChain tech. It uses the enshrined Bifrost validators, all gossip amongst themselves. They draw prices from at least 3 different exchanges each. For each token, they submit a price to. Anybody trying to submit the price that's too high or too low just gets rejected from the vote. But that's the price that it gets valued against.
My bad. Sorry. That's right. And so the enshrined oracle, that's pulling price feeds, not just from the THORChain pool, but from like, how many different exchanges is it pulling from?
I would need to look at how many providers. I think somewhere between 10 and 15, I think. Each node operator, the same way that a node operator runs Bifrost, and Bifrost observes the transactions that are occurring on every connected chain, sees that there's a deposit to an Asgard vault, and says to every other node operator, hey, we've all seen this. 2/3 of us agree that we've had a deposit to our Asgard vault. Therefore, we will now execute whatever that deposit was, whether it was a swap or a secured asset deposit or whatever. It's exactly the same trust model that we use for the enshrined oracle. So every node operator, every block fetches prices for each token registered on the oracle from at least 3 different sources out of 15. They average them themselves. They all submit them as part of the next block, and then the protocol basically averages out those prices. Or like so the node operators are averaging their own prices to submit, and then the protocol itself averages out the submissions from each node operator, and that's how we get the oracle price.
Is the oracle pulling from Maya, Chainflip, and Near?
Not currently. I think they're mostly centralized exchanges that it pulls the price from.
Is there any reason not to, or they
No,
should?
I mean, we add as many providers as you like. What's also another, while we're talking about the oracle, when you look at like a Chainlink or a Pith or whatever, these are all user land oracles. So you know, these guys they submit prices to multiple chains, but they have to submit those prices as part of a regular block, right? So they don't get any like special access to the start of the block or the end of the block or whatever. They just broadcast the transaction, so they can be front run, and an MEV is a thing. And so often you have to, on some platforms you have to open a position, and then you have to like notionally open it and then confirm it in the next block, because otherwise you get this kind of like prescience leak where the Chainlink or whoever the oracle provider is have they posted a price for a different chain, and you know, a fraction of a second before you can see what the price is going to be, and if you can see what the price is going to be, you can open the position in the direction you need to and profit from that in a very small way, but you do that every block and you start trading pools. What is very nice about the implementation of the THORChain enshrined oracle is that it is guaranteed to be the first transaction in the block, because that's the way that the protocol is coded. And so you have this, the priority that the oracle is given means that you can't get this front running. You get a much better user experience. You know, you open a position and that same transaction, the position is live, right? It's not like you have to confirm it. and if you haven't confirmed it in time, then you've lost your profit or whatever. Yeah, so it's basically an oracle that you can't manipulate and can't find run, which very few other chains have, if any.
Cool. Patriot,
And to your question about why mostly centralized exchange, it's just a function of volume and liquidity. All those oracle price are weighted by volumes, and the reality is at the moment there is much more volume on Binance and a few other big centralized exchanges than on chain. So you get a more reliable representation of the market price by taking sources from there. But there is nothing preventing us to add on-chain sources in the future, especially as this liquidity move from off-chain to on-chain in DeFi.
Okay, so this is a great conversation. I just like, for me, because I'm hearing Kenton, hearing Code Hans, you guys talk, like there is something really special here. All right, we're talking about it like we're dancing around it, but like if someone's listening to this, whether live or the recording, like soundbite time, right? Like why should I use Rujira instead of something maybe like a Hyperliquid or an Aave or any type of centralized exchange, right? And I think the core difference here is that everything, absolutely everything, is fully audible. All the information is going to be on chain, excuse me. And like what Code Han said, like, why did I get liquidated? This is often a black box. You could not figure out what happened, what you did wrong. But if you get liquidated, let's say on Rujira, at least you'll know why it happened. You will be able to dissect everything. And this is the most important thing. No KYC, permissionless access to a decentralized liquidity engine that'll allow you to do almost every single primitive that exists. Well, I think probably every primitive will eventually come. This is the 0 to 1. This is the huge moment. This is what we have all been trying to build for so long, and it is coming. 2026. I am so excited, Code Hans, what you are building. And what we're all building together, I should say. What can we do better? Like, maybe kick it to you, Code Hans. Like, what on the THORChain side? I try to promote Rujira as much as possible, but is there any weaknesses on our end that you want to address or something like that? Like dissect THORChain, right? Like where can we be better?
That's a good question. And honestly, it's not really something I've even thought about. I don't think there's, and you can't like point a finger and say do this better, do that better. This is a process, and we're all aligned, right? That's the most important thing. As long as we have alignment, then we will move in the right direction. So just keep these spaces happening, keep the dialogue open, keep the conversations happening, and maintain that alignment.
That's great. And that's the one thing, because I always get insecure about like, are we doing the right thing? Especially when I'm not hearing feedback. But if we're not hearing feedback, then I think that means we're doing okay, because no one seems to have concerns. I mean, if you went back a year ago, it was just nothing about, it was just constant feedback, which is useful information, right? Like feedback's not necessarily a bad thing, but yes, that is one thing we're going to keep doing. We are going to keep doing these spaces. We're going to keep talking about it. And guys, I'm so excited for 2026, but rest assured, we will incur issues, problems, unique situations. I think, you've all seen just the interesting problems that we have run into that were unforeseen, simply because we are truly developing a 0 to 1, whether it's keeping the website, going, it's the data throughput issues we've had. We're going to keep this dialogue going. We're going to keep these spaces going. And I want you guys, like, please, if you ever want to do a Rujiran space, like you want to talk about something new or exciting, please let me know. Because keeping both sides of the equation up to date, informed, I think that is one of the most important things we can do as a community going 2026. So awesome. Well, I'm glad we're doing everything we possibly can. But again, guys, just keep it up. Kenton, you got something?
Yeah, I do. I am wondering if there's something we can do better. I'm curious about the block times and like the speed in the transactions. So like, this is something Hyperliquid promotes, right? Or is it 200 millisecond block times? And what these high frequency traders, it's all about speed. And like even like in the stock market, like the Wall Street will pay a premium to get their offices as close as possible to the exchange to cut the distance on the wires, because even with the speed of light, it still makes a difference on their trading being physically closer to the exchange. I'm curious what you guys' thoughts are there, like on app layer that, you know, do we how can we make things as fast as possible for these traders?
So my view on this is that, as you say, like Wall Street will pay a premium to put an office closer to location. We want to build, and we are building, and like an unstoppable permissionless decentralized protocol. Part of that is having a globally distributed network of validators and node operators, and then you are constrained by the speed of light, and you're constrained by the rules of your consensus protocol. So yes, like clock times are what, 6 seconds right now, roughly. They can be faster, but I think it is a it's not a good idea to go chasing after the kind of, we're going to be the fastest blockchain, because or we're going to try and be faster than Wall Street, because you're never going to do it, right? Somebody that has a centralized server in one office and everybody else is paying to be really close to that server, so they've got the shortest cables to that server. There is no way that you can build a permissionless decentralized protocol that competes with those kind of speeds. But what we can do is we can flank those operations, and we can stand up for the things that we actually care about, right? To be like community owned, to be transparent, to be fair, which Wall Street is not, right? And those are like the lines that we draw, the battle lines that we draw, and that's the front that we fight on. It's not trying to be like 10 milliseconds faster than somebody else, because it's just the reality is that's not going to happen.
So that is the benefits of centralization is speed.
Yeah.
But the benefit of decentralization is safety. So
Yeah.
Instead of trying to be the fastest, we're trying to be the safest,
most transparent, community owned, fair, like all the things that actually matter, right? Like, sure, if I'm going to beat you on a trade, I'm going to scalp you for 10 bits or whatever it is, but let's actually build a financial system that is accessible to everybody, that benefits the users, and has the roots for community ownership, which you can say none of those things apply to Wall Street or traditional banks or centralized exchanges or any of that kind of stuff.
well, even some of the so-called DeFi protocols.
Yeah, exactly.
So then when I hear that, I think, okay, THORChain is you guys are playing the long game, right? We're building stability, something that can survive and last and persist. Whereas the flavors of the day will come and like, oh, we're 10 milliseconds faster and this and that, and everybody will use it. But then eventually, because there's the only way to be that fast, there's some element of centralization that's going to end up, they're going to burning out. The problems are going to surface, and they could even blow up maybe. Whereas THORChain is going to keep humming along, keep doing its thing, because it's building stability and security and safety. Is that a way to think about it?
Yeah, absolutely. The number of times I've had people come to me and be like, be more like Blast. Remember Blast? It's only a couple of years ago, but they were like massive for about 3 weeks and then suddenly just disappeared. Or be more like this person, or be more like that chain, or whatever. And you can kind of see it. It's all just hype driven. It's all narrative driven, which is, it's great. Sure, fine, whatever. Right? I'm sure some people got rich off that and whatever, and it's probably, it is what it is, right? But I personally speaking, I got into this space because it had this kind of opportunity for community ownership and the decentralization and all those kind of like really like good things. And so that's what I'm here for. So if that's what we're going to build, frankly.
Yeah, I'm here for the uncensorship. That's the thing too with those platforms. If they are sacrificing decentralization for speed, they're eventually going to be censored or be forced to censor, and that's another. I think that's the real value add for THORChain and app layer is not being censored.
Yeah, absolutely.
So I do maybe change the subject a bit. What's the deal with orbital pools? Those sounded pretty cool. And that was like you could have like 5 different stable coins all in one pool, and seems like that's been shelved, put on the back burner.
It's so the concept of orbital pools is a kind of multi-dimensional stable invariant, and it was proposed in a paper. I think we were the first team to sit down and write it in anger, and it seems that potentially, I mean, maybe we didn't understand it properly, but there's a potential that actually the fundamental principle just doesn't work. So it is on the back burner. It's obviously a very exciting, very interesting concept. It makes sense logically, and so there should be some way to make it work. But yeah, it's a work in progress.
All right, cool. Okay, so 2025 seems like this was the year of building. 2026 is going to be the year of scaling, right? To start, actually growing and using everything you guys have built. Like, are we at that point now?
Yeah, I think we've kind of crossed that line now. So, like I say, credit accounts are now in. They've got a bug bounty open that will run till the 16th of January. And after that, training wheels come off. We open the lending limits. We rolled out Fin like Rujira Trade 1.1. It's got a bunch of new features. 1.2 is going to have even more. Like it's yeah, we're definitely kind of obviously like lots of new products, lots of new features, but we are entering this kind of like right now. We've got a thing that we can grow.
Right on.
And I have maybe like you were asking earlier if we are mostly done with the development. On my view, so Hassan said like now we have something to push on the credit side, but what he said earlier is there are really two parts in DeFi. You have credits and then you have trading. I think we are in a very good place now on the credit side, but we still need to do a few more things, relatively simple things, but to improve the trading side. And then we have the combination of the two, because if we only have the credits, but people can borrow, but then they can do nothing except maybe take a loan against USDC to off-ramp, and which is a valid use case, but it's not going to create economic activity. If you want to boost economic activity, boost volume of trading, which eventually, because it has just a much higher velocity for the same quantity of capital at work, you churn it much faster, so you make more revenue. We need to provide better tools. Right now, we have the order book and people can play with limit orders, oracle order, or market orders. But the reality is most of your volume don't come from people like just clicking and placing a few trades. Yes, once in a while, you may have a big whale that will come if you can attract them and that will place some large order. But most of your volumes is coming from people doing market making, using LP toolings effectively, to instead of having to themselves decide every time to buy and sell. That's the beauty of DeFi. You can just DeFi like Uniswap V3 consolidated liquidity pool is a beautiful product. It has a product market fit, like there are over 4 billion of assets doing that on Uniswap. And that's probably by a large margin, the biggest way how people trade in DeFi. They don't buy and sell manually. They decide, okay, for BTC at this price, I'm happy to be 100% in BTC at I don't know 50K, and at 150K, I'm happy to be 100% USDC. And now that's my view on the market, and I'm gonna put a consolidated liquidity position in this range. And because there is volatility, as long as price move, I'm gonna keep buying and selling and collect small fees on that, and that's how I'm gonna make money. And I generate yield on this position without having to be there at my screen doing anything manually, and that's the beauty of it. And I think this is the other piece that is missing, is offering like great market making strategy. That right now we have just XYK pools, but nobody uses that anymore. I mean, it's good, you need that a bit to have pricing curve from 0 to infinity, especially for tokens that have lower market caps and lower liquidity. But if you want to trade to become a blue chip DEX for all the large cap tokens, what you need is better tool for that. And the beauty is then we can allow people to use those tools for not just Ethereum because you're in ZVM world, or Sol token because you're in Solana. We can do that for all the native token of all the connected chain, but we need those tools. So we need consolidated liquidity, Uniswap V3, and we also need like we have a design, have something I need to spec a bit more, but it's already modeled in Excel. I think it will be very cool. That will complement the CL strategy. That will offer a very different way also to make market in a very efficient way by using Oracle orders, and that's very unique to something we can do. And then that's, I think, when we start to really scale volumes and also increase demand for lending, because now you can borrow in your credit account and use those funds to generate yield by market making, and not doing XYK that's going to maybe yield you 1 or 2% per year, but doing something that can be closer to 10 to 30% APR, potentially more. And having strategies that start to trade once against another. So even when two traders that are not in front of their screens, they keep trading as long as there is volatility. And that's how I think we can start to churn volume, attract demands, and generate revenue for THORChain and for the whole ecosystem. And the other side of that is once we improve that, the next step, once we have this decent liquidity on the app layer, we can start to internalize arbitrage, some of the arbitrage at least that is currently happening between centralized exchange and THORChain. And we can be we can do that in a much more efficient way. And by doing so, we can start to effectively improve the pricing of THORChain base layer pool, because instead of like currently, like we have done some research, and arbitrageurs tend to be very greedy on THORChain, that let the price deviate by sometimes 40 to 60 bips from what we measure as a market price using enshrined oracles. And you don't need to deviate that much. You can arbitrage earlier, capture shorter, smaller profits, but keep the price aligned. So you arbitrage more frequently with smaller deviation, and you keep the price closer to the oracle. And doing that, we can also generate a lot of volumes and a lot of fees for both THORChain and Rujira. So those are actually the things I'm excited about. And I think that's the part that is still missing in terms of building. Once we have those two sides, the credits and the trading, then we are in a very good place to scale. And then it will be time to also build tools to help scaling, and that will be notably all the referral and affiliate programs, so we can start to push people to come with affiliate code for calls, but also other protocols to build on top with an easy way to monetize. But I think first and very exciting is getting also the other side of credit, which is trading.
Very exciting.
Yeah, sorry, Pedro. Pragmatic Monkey, I apologize. How is AppLayer going to help get the tighter spreads on quotes on the base layer? Is it because of credit markets, people will borrow and they'll be more capital efficient? Sorry.
No, I'm talking about not credit market. I'm talking about the trading part. So having IMM strategy that live on the app layers, Uniswap history style, and other using Oracle orders. So I'm not talking about credit here. Those two can work together if you do leverage trading. Once we have this liquidity on the app layer, we can internalize part of this trading. So instead of trading, so let's say we have a market making strategy that every block provides you liquidity on at least one side, either the buy or the sell side, at the oracle price virtually, maybe with 3 bips or 2 bips difference, like because we need to let a bit of profits for the LPs, but very close to the oracle price. And instead of using this price, because we use enshrined oracle, is different from the base layer price. So now, if somebody comes and do a big trade on the base layer and it deviates price, which usually happens, especially when you have those big streaming swap, price start to arbitrage have to wait for some time to your profits, and then they capture the arbitrage. So let's say sell on THORChain base layer to push back the price if it went too high back to market price. At the same time, buy on the centralized exchange. And captures this delta net of fees between the two different prices. Well, instead of doing that on a centralized exchange, we can write a contract and do that at least in parts based on whatever liquidity we have available on the app layer. Do that between the base layer and the app layer. And by doing that, if we increase the frequency, so effectively it's a function of how much do you let the price deviate from market price, from the oracle price before you arbitrage. If we do that, the more frequently we do, we could do it every block potentially, and let the price deviate just by whatever, like 10 bips, 15 bips, depending on cost on both sides, of course. But we can do it much more faster than what we see by looking at the data arbitrageurs are currently doing. And by doing that, it means we keep the price, every single block of the base layer pool, much more in line with the market price. And that means a better pricing. And sorry, the other side of that, so is that part clear?
Sorry, I'm still having a hard time following it, because if it's, I understand you can on app layer you can try and get the price close to the Oracle price, but then if you go to realize it, you still have to use the THORChain base layer price. I'm a little bit.
Yeah, no. So imagine a whale come on THORChain and do a 1 billion streaming swap to buy Bitcoin with USDC. So it's going to start to buy Bitcoin, and this is going to push mechanically the price of Bitcoin on the base layer up and up and up, and every block it goes a bit higher as every time there is a swap. And the only way this price comes back to whatever is the current market price, which we can measure by the Oracle price, is by having an arbitrager that come and say, oh, now the price of Bitcoin on the THORChain base layer is higher than the market price. I'm going to sell there, and at the same time, I'm going to buy on Binance. I'm going to capture this spread. And then the question is, how long do you wait before you do this arbitrage, you activate it, and you effectively by selling on the THORChain, push back the price to market level. And what we can do is just right now, what we see when you look at the data, and at some point we'll just share an article, just don't want to do that quite yet. Still, we have a bit more advanced from the theory to the practice. But what we see is the deviation starts to be much higher than what would be required to still have a profitable arbitrage. And the more you let the price deviate, the more the pricing of the base layer pool and the quote, your swap kit and whoever is requesting a quote from the THORChain quote on point will have a price that is off compared to the market price. And so that means, well, maybe sometimes you will be more competitive, but most of the time it will probably be that you are less competitive than other people that can cut right at the market, like near intent or whatever. And by internalizing those arbitrage and being less greedy in terms of arbitrage profit research, we can reduce the delta between the average price of the base layer pool and the market price every single block.
Okay, I think I might get it. So instead of right now on the base layer, the way it currently is, ARBs they trade between base layer and a centralized exchange. But now with app layer, the ARBs will be able to trade between base layer and app layer, which will be much more efficient, much quicker, and therefore should have tighter spreads. And then every once in a while, they might settle between app layer and a centralized exchange. Is that right?
Yeah, so exactly. So actually, the idea would be not to internalize that for both THORChain and Rujira. So we will not even not just like third-party arbitrager will be able to do that, but we will also do that. Have a contract that does it automatically and shares the profit between THORChain and Ruji. And that's very powerful because it's a lot of volumes and a lot of revenue that suddenly, instead of leaving those profits on the table for external arbitrager, we can capture part of that and increase revenue and cash flow for both of our protocols. So that's I think something very, very exciting. And yeah, but for it to be possible, we need good liquidity, able to price very close to Oracle on the app layer.
Okay,
I got to jump.
Oh, sorry.
I'm so sorry, Kenton. I need to jump in real quick. Code Hans has to leave in a few minutes, so I just want to make sure we give him a little bit of time here. Do you have any closing thoughts for us, Code Hans, before you do leave? The floor is yours.
Oh, I mean, I think I've said my piece so far. Yeah, I mean, I posted about it a few times. The whole kind of like doing what we did on Rujira, but having access to native assets, native BTC, native ETH, and all the everything we're going to add now. You know, obviously the Litecoin, the XRP, everything already, all the things that are coming. Being able to interact with it directly and interface with those chains was a bit of a pipe dream. And now we're here, and we're kind of, you know, the building up ahead of steam, and things are moving, and it's just there's some very exciting things coming. I'm looking forward to what 2026 has in store.
Do you have time for just a quick question from a community member? I think you might be the best to answer it. They want to know, could you estimate the quarter when maybe a Bitcoin-backed stablecoin is planned to launch?
I generally don't answer whens, because things change and priorities get reshuffled, and emergencies happen, and all sorts of things. But as far as a ranked priority goes, we have a bunch of kind of I's to dot and T's to cross, and bugs to iron out over the next couple of weeks. But once we're through that, and once we get the next version of Rujira Trade live, then yeah, I think the mint vault that I talked about earlier should be a notionally trivial thing to build. He says now, probably won't be, but that is, you know, it's going to unlock so many things. It's going to unlock that stable coin. It's going to unlock the purchase market. It's going to unlock, yeah, other things. But we'll talk about it another time.
Can I squeeze in one more question? Is that okay?
Yeah, go, yeah.
Oh, okay, perfect. This is a really fun question, and then maybe Pragmatic, you can do it. But this is basically a, you know, I know you don't have projections, but it's a fun question. It says, you know, what do you think on a high level, volumes, total volume lock, target, key performance indicators? So Code-Hans, I'll ask you as a final question. What would you think success would look like in 2026?
It's a good question, right? I don't think you, and I'm going to kind of step back a few steps from this. I don't think you don't achieve success by having some metric that, like, when I get to this point, that's a success, because success isn't a target. Success is a process, and it's a thing you have to wake up when you want to keep moving forward every morning, and you have this kind of adjustment almost that okay, great, like you start from zero, and now it's like, okay, now we're doing whatever it is, right? Like you just put, no, I'm doing 100 a day, whatever it is, and wow, that's a good day, 100 a day. And it's like, okay, and then the next day, like, oh, it's only 100 today, right? Let's go. I want to wake up tomorrow. We're going to do 200, and then like, oh, that's great. I've done 200 today, and then it becomes kind of the norm. And so that, like, I don't think there's like you can't just say, oh, we're going to do 100 million a day or in volume or whatever it is, right? It's what you have to have confidence in is that we are here, like, in the trenches, not those kind of trenches, no fun trenches, but like we're actually building something, and we wake up every morning and we want to keep building it, and we want to make it bigger and stronger. And as long as you're doing the right thing in the right way, it will continue to grow. It's, yeah. PM, I know, has models and targets and numbers, but yeah, I am like, I'm going to wake up today and I'm going to make things better, and I'm going to do it tomorrow and the day after and the day after.
And I'm not going to share any targets or models and this type of things, because anyway, it's all Fugazi till it's free.
Yeah.
What we need to do is get those trading tools in, then start to build a baseline of numbers, and we'll have analytics. We're working on that as well. And then that's how, once we have this baseline, that's how we measure success, because there was a question, is how do we grow that in terms of metrics? But as Anne said, the key part is, are we showing up every day and building this and making sure metrics are turning in the right direction. For now, because we don't have this baseline, because we don't have all the core pieces yet, talking about targets is really meaningless. But also, as a decentralized protocol, I think we should also refrain from that. This is when you start to make a forward-looking projection and share that publicly, it puts you in a risky territory. So the best we can do is to then share good analytics and allow people to make their own projections based on reality and what has been achieved, rather than forward-looking stuff provided by the team itself.
Great. And I know you have to go, Code-Hans. I just want to thank you very much for surprising us today with your presence. I know the Rujira guys really love that. I certainly love that. And I just hope you have a Merry Christmas or whatever holiday you celebrate, and a Happy New Year. Get some family time in. And I'm so ready for 2026, buddy. Just thank you very much again for giving us your time. So I know you're super busy.
No, thank you guys. It's joy. It's great. Happy holidays to everyone, and see you in the new year.
I'll see you in the new year, buddy.
Thanks,
Awesome.
Hans.
Great.
Every day, mate. See you.
When it comes to myself, key performance indicators, I'm not really much of a numbers guy on this either, but I will say if the community, if both ecosystems are shared ecosystems, if there's no conflict, if everyone seems to be up to date, if people are informed, if their issues come up and we address them efficiently, we communicate, we have dialogue, we course correct. If we're able to do that as a community, I'll consider that partially successful on my part. That's my focus. That's my goal, at least, guys. And if you feel like I'm shortcoming or if I can do better, please give me feedback. I have no ego on this. I just want to be the best I can be. So at least that's my perspective. That's what I'm going to keep doing. So yeah.
Do you mind if we pick up where we left off, Pragmatic Monkey and
Yes,
the
sir.
arbing? So my smooth brain still needs time to catch up. So let me know if I got this right. So on the base layer of THORChain to arb, like, we have to rely on block times, the time for the centralized exchange to deposit or withdraw. There's just simply time, it takes to go between the two. And the arbs have to factor that into their risk analysis, right? So that's probably why they need bigger spreads to make it make sense. Whereas if the arbs can arb between, like, they need to go to the centralized exchange to find the price of Bitcoin or whatever, right? But now on app layer with oracles, they can find the price of Bitcoin on the app layer, and so they can arb between, instead of arbing between base layer and centralized exchange, they can arb between the app layer and base layer, because now they have a feed for that, air quotes, true Bitcoin price. And arbing between the app layer and base layer is 6 seconds. Like, it's like, orders of magnitude faster than trying to arb between the base layer and a centralized exchange. Therefore,
So
am I wrong?
don't
Am I
think
right?
it's,
Am I on the right track?
no, I don't think it's so much a question of speed here, because arbitrager, and I'm not no expert in how they operate exactly, but my understanding is that they use trade assets mostly to arbitrage, and trade assets allow you instant settlement for buying or selling. It's just like the same as secured assets, except that they cannot be transferred, I think. But you can instantly settle on a THORChain block speed. So it means every 6 seconds, you could theoretically take an arbitrage between your sex and THORChain. So it's more, I think, a question of there is not enough competition between arbitrageurs, or maybe there are other reasons I'm not getting, but I think it's a lack of competition, which means that they tend to let price deviate more than necessary, because nobody else is there to say, oh, it's kind of how you say, game of chicken. Imagine you have like 10 arbitrageurs all competing from a spread. So you will have the price of the base layer pool, Bitcoin in the base layer pool, that start to deviate from the price on Binance. And then first, because you have to factor your fees on each side, a few bips won't be enough to be profitable. But at some point, boom, let's say you have like a 20 bips difference, and now it's profitable to do that. But if you take the arbitrage now, after fees, maybe you will just be doing like 5 bips of profits. So, but from there, every single block you let pass. So every 6 seconds you let pass, and the price continues to deviate. The more, the bigger your profit, and whatever is beyond your initial cost is pure margin. So then it's just a matter of which arbitrager is going to be the first one to take this arbitrage, to sell your Bitcoin on the base layer pool and to buy at the same time on Binance. And so it's, I think, just that there is not enough people competing to get that, or I don't know, or say collusion between the arbitrager. I have no clue what it is, but what I know is I have like downloaded a lot of data, looking at minute data over several months, and the deviation tend to be like 40 to 60 bips, sometimes even more, and you don't need that much for a profitable arbitrage. And so those same arbitrageurs, they could use trade assets and still settle on Binance if they wanted to, or we can do it ourselves. We can create competition effectively with the arbitrager, making THORChain, making Rujira effectively, but with a profit share with THORChain, an arbitrager in our own ecosystem, and instead of relying on us just on those external arbitrageurs that take these profits, we can be more aggressive because it's in the interest of the protocol, because it provides better pricing, and because it's a new stream of income, of revenue. And we just compete with them. Maybe actually they can still win like some of those, or they have actually better terms at the fee we have to pay on the app player side. So they can, so some of those like can be very large players that have like a half a bips maker fee, taker fee, sorry, on Binance. So maybe they can be more competitive on certain parts. But at least it forces them to take the arbitrage earlier if they still want it. So it's just adding competition, and that's what is increasing the pricing. So speed here, of course, and that's tailed to your other question. That's another thing. Like the longer the block time, the more risk any arbitrager or any market maker is taking between two blocks, and so the less aggressive you can price when providing liquidity. It goes the same with arbitrage. The longer you have to wait, the more deviation you may have. So possibly kind of partly cancel out, but generally it just means like the more you have to wait, the less frequently you can take those arbitrage, and therefore you have to have a bit less competitive pricing versus a chain like you were talking about, hyperliquid at 200 millisecond block. Yeah, for sure we'll never compete there. But there is also an opportunity down the road, I think, to get THORChain block time to 2 seconds. I mean, this is theoretically already possible. The code has been shipped somewhere this year earlier by the Strangelove team before they got relief of their functions, and that will also help to increase the volumes and pricing, because just you can arbitrage more frequently and keep price more aligned with the market as settle faster. And just from 6 to 2 seconds will already be a big improvement compared to where we are now.
So, okay, thanks for that. So then is another way to say or look at then basically app player is just going to provide better tooling for traders to use, and that will increase competition in the arbitrage space, and therefore should get us tighter.
In that case, like we are talking about creating a contract that does the arbitrage itself, not I mean, for existing arbitrager, for other people who do that with trade asset or secure asset if they wanted to. Like the tools are there. What we are talking about is becoming an active actor in this field. It's ourselves having a contract, ourselves as a protocol having a contract that proactively look at the discrepancy between the base layer and the app layer pool and capture those arbitrage the same way other party arbitrage versus centralized exchanges. But except that we consume, to do that, we'll consume the liquidity.
Wait a minute. So you're saying that this is going to be like a protocol-owned contract?
Yeah, it will be a contract, a smart contract. So it will be a protocol, a set of rules that define, if price in the that is able to look at the price and understand the price and predict the price of, not predict, but like see what will be the price inside a certain block. And then we have, I don't want to go too deep into that, but then we can insert in this exact block. We know also the price and the liquidity available on the app layer. We know the price on the base layer. We can say, now the delta is, let's say, 25 bips. So I'm going to take this arbitrage. I'm going to buy on the app layer and sell on the base layer in the same block. Or because on THORChain things happen at the end of, well, actually, we can do it everything in the same block. Like first do it on the app layer and then under block the counterpart on the base layer. And we can even like know exactly how many like what transactions are in this block to have a more accurate estimate of what will be that price and kind of capture actually a perfect arbitrage. And that's, think of it as a new product on Rujira, but a product that is not like, it won't be for users to deposit there. We probably don't need liquidity. We can probably do the same as virtualization strategy, just borrow for a very short period the token we need to do this arbitrage loop. So again, it's rely on a lending market, just like the virtualization strategy. And now to access those profits, anybody that on Ruji and is a Ruji stacker can access a share of those proceeds, or anybody that's on Rune and bond their Rune. If we do a 50-50 split there, which is what we are thinking of, even if technically we are already paying the base layer fee, but there are other consideration. What we could do is then THORChain could lower the fee for secured assets, and effectively it will allow us to arbitrage even more frequently. And because we share the profits from the arbitrage, you compensate the lower fee on the secured asset parts by a new revenue stream that is arbitrage profits. And so it creates a new stream of income for the protocol. So you keep saying that tools for external arbitrager, those tools are already there if they want to. What is missing is, of course, the liquidity close to Oracle price on the app layer, but they have secured assets, they have trade assets, they can already arbitrage, and they are doing it. What we are talking about here is creating a new contract, a new protocol that is doing this arbitrage and that distributes those arbitrage proceeds between THORChain and Ruji.
Wouldn't the existing arbs then in theory go out of business, and then the price discovery on the pools is actually the Oracle price, and now the price on THORChain is being determined by an Oracle instead of price discovery?
So first, it will always be constraints. Like I was saying, like some arbitrager may have like very good terms on Binance because they do very high volumes, and so they may be able to arbitrage at actually lower spread than what we will need for this contract to be profitable. So it's just increased competition, but it doesn't put them out of business, and some of them will still be there, I'm sure. And also there is a big constraint, which is how much liquidity is available on the app layer to capture those arbitrage, and especially initially it won't be much. So there is room for that. But so first point, it's not gonna remove external arbitrager, absolutely not. It's just gonna create more competition, and to win those arbitrage, they will have to price more aggressively versus what they are doing now. Second part, you are saying if we do that, then the price on THORChain could become a price of Oracle, but that's already what is happening. Oracle price is a blended, volume-weighted blended representation of price on centralized exchange, and currently price on the base layer pool are effectively reflecting the price on centralized exchange, the market price, which is based on the exchange where you have the most volume. Usually it's going to be Binance and a few of those. And those arbitrageurs, by trading whenever there is enough deviation between the price in the pool and the exchange, by taking this arbitrage, they keep the price of the pool in line. So that doesn't change anything. Like at the end, no matter if the arbitrage is captured internally or externally, that's why there is market, because there is a consensus at any point in time of what is the market price. Usually the consensus is where is the price set. Typically it's going to be on Binance, a large centralized exchange. That would be your source of truth if you have enough liquidity there compared to the liquidity on THORChain. And of course you have much more, you can do much bigger order on Binance for Bitcoin or ETH or whatever versus what you can do on THORChain without moving the price. So this will be where the price is set, and then you arbitrage this reference price with the base layer pool. But at the end, everything trend towards this Oracle price. This Oracle is just a representation of market price of what's a fair price based on the price we observe on various different venues that have large volumes.
Okay. Patriot, do you want to jump in?
And maybe just another thing on that, like, and if for some reason the Oracle was to be deficient and go crazy, then it would be a lot for the protocol. So that's a risk. But other arbitrageurs, that means, could step in and balance the price. Like let's say the Oracle go crazy and we start to completely deviate the price from the actual market price, then arbitrager will come and we'll have even more opportunity and incentive to re-arbitrage towards the market price, because now it's going in the wrong direction. So it's not the Oracle that defines the price. It's still the market. From the moment you have spot liquidity in the pool, you have an opportunity to arbitrage, and assuming you have another place where you can sell or buy at a different price.
And there we go. Very interesting conversation, guys. And that's the great thing you do, Kenton. You get into the nitty gritty and really define things. So I really appreciate that. I do have a question from a community member on Rujira, from Al. They want to know, 1 second, I am so sorry. They want to know, Pragmatic Monkey, are you working, or is the team working on a simpler way to onboard retail to the Rujira system?
So eventually, yes, this will be, well, first of all, we are improving every day. We collect a ton of feedback. We have still like a list of almost 200 tickets open of stuff we have to improve. Most of that is UI, UX stuff. So we keep improving. And I think people who have been there from the beginning can already see a huge improvement between how it was 3 months ago and how it is now. So that's a continuous process. But then the next step will be probably Station, our own mobile app, that it will be a dumbed-down version of Rujira. So the Rujira web app is fairly complex with all those tools and stuff. It can be a bit doubting if you don't know your way around. The idea behind Station will be to make it a very easy, accessible tool that give you access to the key feature without having all the details effectively, and that will come. But again, it's just a matter of prioritization. Like will not make any sense to try to push now for onboarding users when we are still lacking some core pieces, including good market making strategy and liquidity on the spot market, which in turn, when you combine with credit account, for example, will allow us to create a delta neutral market making strategy. We can then be used as a high yield saving account. And that's something we can package in a Station, and people don't even know that in the backend they are using credit accounts and consolidated LPs. They just see, oh, I can deposit my Bitcoin or my USDC and get 6, 12, whatever will be the sustainable yield we can generate. And that's very powerful. And that's, if you think about how Terra scaled back in the day and how they onboarded, they had such a success. It was mostly around having this fairly easy interface and having UST, which was offering this crazy 20% APR. So it was a simple stablecoin saving product, of course, based on a flooded design, which imploded. But we can replicate something that has so the yield, it will, like, it's market dynamics, so it will depend eventually of different factors, but mostly how much we can make on a CL strategy that automatically rebalance in average, and how much is the average cost to hedge this strategy, either by using our upcoming future product or just borrowing one side of the LP. And then the net of that will still should, like in theory, if you look at the yield on the Uniswap, you can see easily like 10 to 30% APR sustainable purely based on yield on CL LP position. So let's say we have an average borrowing cost at 6 to 10%. Like there should still be able to create a saving product that has probably 5 to 20% maybe on the higher end. It will fluctuate over time, but of sustainable yields without having exposure to impermanent loss effectively, or any like token. Like you just pick the one you want, you hedge the other side, and you save. And that's a very powerful product that you can offer that in a mobile app for people who don't understand DeFi, don't care about it, but you can just say, hey, you have USDC or USD, you want to save and make more than on your bank. Here is an option. Of course, there are risks involved and disclaimer, blah, blah, blah. But you have something, and if you want to dig into it, this is how it works under the hood, and that's why it's sustainable. And your collateral is USDC. It's not some random new stable coin that is backed by nothing but wheat.
Got it. Sounds good. Dash dang, guys, very good. This has been a really fantastic space. I let me see here. One question I did ask Only Hans, or not Only Hans, sorry, shout out to Only Hans. Code Hans, I meant to say. Thanks, Only Hans, for confusing me with the name. I asked Code Hans, what's getting you very excited for 2026? So I want to give you the same question, Pragmatic Monkey. What are you most looking forward to?
Oh, okay. So actually, I did my part already. That was what I was mentioning earlier, so I'm not gonna repeat. But effectively, Hans spoke about the credit side, but there are two legs to DeFi: credits and trading. And I'm very much excited about this credit side. So CL Uniswap V3 strategies, Uniswap V3 style. This new IMF strategy using Oracle order, which I've been working on conceptually and modeling in some spreadsheets. And then once we have that, this third part, which will be internalizing the arbitrage or part of the arbitrage profits between app layer and base layer, and after that also then moving on into combining the strategy with credit accounts to create delta neutral saving products. And yeah, that's for me, that's the key stuff I'm very, very excited about.
Very cool. Very cool. Well, I don't have any other questions, guys. Shout out. This is an open stage, by the way. Anyone's welcome to come here. No one's requested yet. So I do encourage if anyone. So this is going to be the last space of 2025, you guys. Very, very exciting. Kenton, you got something?
Yeah. Pragmatic Monkey. I just wanted to make sure that we're still cool. You're still cool with the THORChain front end swap interface, the swap.thorchain.org, that we do, basically clone, copy, Rujira trade, have all the same features, functionality, and everything there for app layer.
Absolutely. I'm all in for that. I think the more we have other front ends, the better it will be. For other front ends, that's also why we will have the referral and affiliate system. But for THORChain, it makes total sense. We don't need that. We can get started. Like, for example, now we have CDP loans. Once in mid-January, once we are done with the bug bounty competition, and we can start to increase the caps, it would be great to see you adding that directly into the front end, and everything we build, and whenever there is a product we add that makes sense, I think everything eventually should be there as well. And yeah, very likely we have quite some overlap between the Rujira and THORChain community. It's pretty much the same family now, but still I think THORChain has a much broader audience, and so you can probably attract more usage, and as a would use the same protocols, and we all benefit. So yeah, 100%.
Is your front end, is it all open source?
Yes.
Okay, so we can just copy it basically and just swap the Rujira logo for THORChain logo, and then it's all done. Yeah.
Yeah, you could do that, absolutely. Yes, the hard part is really all the API stuff, like, because we show quite a lot and we are connected to all those chain, and so that's the part where you will have to handle. But like, if you copy, like, you could probably even use our API. I mean, that's more a question for Hans. How do we do that eventually? But you would have everything. You could even, like, we don't encourage you to reuse the components we have been using, the wallet connector, like, so having to deal with all those painful process of merging all those wallet and all those chain. Like, we do this hard work for you and for all the other builders. The tools are there, so the components are there. You can reuse them. It's open source for this reason. So yeah, you are very much welcome to use it.
Great, awesome. Yeah, I'm guessing it's probably not gonna be till February till we start looking into that. We'll see.
Yeah, sounds good. Like, I think February should sound like a good time.
Yeah, it's like Hans said about timing. It's something I've learned. It's been painfully clear to me the last several months, like working on this front end. Like, developers in time are on like two different universes. I kind of given up asking for timelines and estimates, because it may as well just like pulling numbers out of the air. So
You know, exactly. That's why, by the way, we don't give like always when. As Hans was saying, first 6 never go how you plan. There's always issue you did not foresee that comes up. And it's even more complex building on THORChain because you have to handle all this complexity of also what we call this omni-chain stuff, like all those different chains, all those different balance you need to observe, all those different ecosystem. Like it adds on top of the regular difficulty of software development, it adds another layer of complexity. So yeah, it's like based on where we are now, I think February is a good time to start really digging into that for CDP launch. At least for sure it will be ready. It's already ready. But yeah, we never know. So yeah, I understand your frustration, and especially but yeah, that's something like I share the same. We all share the same, but that's just a reality of how it is, and part of the cards we are dealt when we build DeFi products.
yeah, for sure. I'm actually looking forward to it. We can have a friendly competition about who's getting users to which website, which front end.
Yeah, absolutely. We can that would be fun. We'll build some analytics to be able to track that. Like once we are like, yeah, should be some way. Worst case, like we could even like you could use a referral code without any fees, because like we already share 50% of the fees. Would not make sense that the THORChain front end has take some more fees on that, or then we will do the same on the Rujira side to take some more of the fee. Like this, I don't think it makes sense, but we can do a referral code without well, actually no, but that would be bad because then you cannot use the referral code yourself to refer other users. So we'll figure it out, but for sure there will be a way to track the source of traffic, and if not, we'll add something. It's easy, and allow us to have a friendly competition of where most of the volume is coming from.
And I have to give a shout out to Erudite. Am I saying his name right?
Yeah, Erudite.
Yeah.
Well, you're asking a French fan, so maybe I'm not the best to comment on pronunciation. Stacker.
Yeah.
Stakers.
Well, you correct me if I'm wrong, but he's helping with like promoting and marketing Rujira, and he's definitely keen to do stuff together with THORChain. We work together to try and promote AppLayer. So I've kind of kept him on the strings. Like we're not quite there yet from the THORChain marketing team point of view, but we will definitely get there, and definitely looking forward to working together and try to grow AppLayer.
He's great. He leads marketing, and it's the two are together. We have also GP Nami, but GP Thor doing BD, but Erudite's really on the marketing side, and also doing some BD because it's related, and very keen to work with you guys. I know there are a ton of plans of stuff where we could collaborate. It's just getting a bit more of the tools, but now we are getting there really. I think CDP launch will be a perfect first integration for the front ends. Once we have the market making strategy, I think that also would be very cool. Like right now, people can't even LP in most of the THORChain pools. And in any case, like LPing is not interesting at all because the state of the incentive pendulum means all the income goes to that operator. But then suddenly, once we have CLLPs, you can also provide that, and people will have an opportunity to put their native asset that works and generate some yield. And it makes total sense to include that as a new tab on the official THORChain front end.
Nice. Patriot, you have anything else?
Yes, I do. Question on my part for you, Pragmatic Monkey. We were doing the Friday live streams on the primitives that are coming on, right? Do you think we'll be resuming them soon in 2026? Just give people information. I'm down for whenever we want to do that.
Let's so I think like let's not force it to be a weekly stuff if we don't like if there is nothing to showcase. The reason we have been postponing it was because it was still a lot of bugs. So we did this big omni-chain upgrade. We changed everything from data structure, like moving from chain-centric model to a token-centric models to all part of the UI. And as a result of that, we were also in parallel doing some change to the infrastructure. And up to recently, we had there are still quite a few bugs that need to be ironed out. But now I think we have ironed out enough that in the new year, we can do one. And I think we can first showcase, like, very simply, the omni-chain experience, where it is up, come, connect your wallet, make a deposit, make a withdrawal, and also showcase then CDP loads. Yeah, so it was really like just a matter of we're having all those country properties, null and define errors when you are doing random stuff on the UI. That was not looking good for a live stream.
Sounds good. And if you have any updates, while I'm thinking this now, with the Coke and myself, we've started doing weekly updates. You know, we're gonna, with the holiday season, maybe we'll miss an episode or two. But if you have any interesting sound bites or facts or something you want to get out there, just send it to With the Coke or myself, and we will add it to the weekly update.
Yeah, of course. I'll let you, but usually the best person for that is Eridice.
Okay,
he also writes weekly recaps. So pretty much every week we have a long form post that recaps all stuff that have been happening on Rujira, but also in the broader ecosystem. And so I think it makes ton of sense to mix that with, to use that as an input effectively for your own rubric. And what is cool is your version is in the form of a video, which attract a different audience, and great. Yeah, it's very good. So I think you can take that, and you will have every week things to say.
Perfect. Well, I'm looking at the Telegram here, guys. I'm not seeing any other questions, so I assume that means everyone has been satiated when it comes to curiosity. Do you guys have anything else at all? I'm wondering if this may be a time to wrap. Of course, anyone can request to come up at any time. This is the last space, so I am prepared to go the extra mile, despite how annoyed you guys get when it comes to the time of these spaces. But this is the last space, guys. We're going to be off for like 2 weeks. So I really want to give anyone the opportunity to come up and speak, because, you know, it's so important to do. But anything else, guys, that you can think of?
No, I'm good. Pragmatic Monkey, do you watch Emily in Paris?
No, I haven't, but a lot of people have told me I should watch that.
It's a guilty pleasure of mine. It's a pretty, like, it's a pretty, how do you say it? It's a pretty basic show, but I actually do watch. I love the fashion, but just kind of just joking around, teasing you.
Maybe that's a good one for the holiday season.
It's definitely not super interesting. It's very basic. It's kind of like it's just something you put on, turn your brain off.
Exactly. We need those. We need those stuff. Like sometimes it's just important to keep your sanity in this space. So
yeah, I was more curious if, like, as a Frenchman, if you have any like disdain for the American view of Paris. They're just kind of bastardizing it.
And I'll watch a few episodes and then I'll let you know. That would be a fun topic to discuss, to change a bit of what we talk about.
Are you in Paris? Where you don't have to dox yourself, but or if you don't want to say, I understand.
No, you can ask. No worries.
Do you live in Paris? Is that where you are?
Howdy.
Oh no. I live in the UK actually. Oh. So I've left France. I haven't been in France for a very long time. Yeah, over 10 years, 15 years. I've been out, and yeah, but the accent is still there, as you can see.
Yes, definitely. Yeah. Well,
we have a new speaker.
Oh, we do. Okay, great.
We do. Yeah, With the Coke snuck up here. With the Coke, go ahead and test your mic. How you doing, buddy?
Check. 1 2 1 2. I hope you can hear me. Let me know.
I can't hear you. Go ahead.
That's good. Yeah, maybe it was answered, but I had really spotty internet, so the conversation was dropping for me a lot. So I have to re-listen to it. And thanks for the shout out, Patriot. Yeah, tomorrow, as usual, we're gonna do the recap. But just to let you know, it's not gonna be only the recap. We're gonna do like functional demos as well, and a lot of things in my mind to spread the love. But the question for me, for the Pragmatic Monkey is that have you onboarded any new teams? I remember you had like an Excel sheet of 20 teams who are like working, trying to get in. is there like any extra work going on in parallel to the main functionality, or it's at the moment postponed till you have this omni-chain figured out?
So we discussed that earlier. I'm gonna recap for you. So we are still like in discussion with a bunch of team, but really this was a mistake, partially due to our history, because we came with already a bunch of builders from the Rujira side, and also at some point when GP was still very involved, he was pushing, get more team on board. This is a very counterproductive thing, because at the end we have Hans, who ultimately is the architect that understands, the only one who really understands full how all the pieces should work together. And everything we do is so new that nobody, all the devs we have worked with, like trying to do the smart contract stuff, they tend to get blocked very quickly. And what happened is ultimately this was consuming a ton of Hans time, and he was spending much more time fixing issue for others than moving on what we should have been focusing first, which are the core building blocks, the foundations. So that was one issue. And it's also like, so for example, when Levan's team was still around, like they took a very, very large amount of time. They were not doing anything, also work to get things working with the base layer and all of that. It has been Hans only. And we got now Matteo also, so Zephyro with great, which we got following the acquisition of Nami. And they are pretty much the two ones that really understand the full system and can create those core primitives in an efficient way. So having all those teams was distraction, waste of time, and also trying to outsource some of the key parts to other devs has proven very unsuccessful. For example, we paid some people to help first with the virtualization strategy. They spent, I don't know, like 2 months or so burning capital for doing code that was completely unfunctional, just because they did not get the full picture. And it's complex. Like, you have to understand how THORChain work, and then on top of that, you have to understand how Rujira work and how all those protocols interact together. So no blame there, but it's just complex. And then we ended up like spending money for code that will never be used, and this has been a repeat story with pretty much all the other teams. So we changed a bit the stance here. Now it's focused first on getting the core primitives out, and then of course the teams are still building, we help them as much as we can, but we have also reduced this number of teams. We have tried to cut people contributing stuff that ended up just doing code that we are not going to end up using, and the phase to onboard more people will be once we have all the core primitive in place, and really the goal will be to build stuff, value-added stuff on top of the core primitive, and not try to build paint the wall of a room before you have even built the foundation of the full house and have all the walls erected and the roof above your head. It's just not the logical sequencing of things.
Thank you for recapping. Sorry that I re-asked the question. I will rephrase or re-angle my question in a different way. Is there in the future gonna be plans to have like environment like ETH, like there's the core devs and then anybody can come and build on top of it, or it's always gonna be like Apple, like you will be the gatekeeping and doing everything? Just wondering that. I don't know if it was asked.
Smart contract will remain permissioned, and also like depending on how we are gonna say do things for the referral and affiliate systems, there is a way to do that 100% on chain in a very powerful way that could have all the features I have been drafting in the issue. If you have been following that, that would be very, very nice, but that will require using proxy contracts. So even for security reasons, we could not allow a permissionless deployment of contracts. And that's always the thing. Then we will see when the exclusivity ends if THORChain wants to change how things are working. But I think we lose the ability to do certain very powerful things such as referral and affiliate on chain if we do that. And we want this coherence in the ecosystem. And no matter what we do, the way it's structured now, aren't always asked to review and approve the contracts, just for a security reason, and that was also described and pushed by GP in ADR 20, that Hans is the one reviewing all those things. So we cannot really, like, if we go permission, it's, again, I don't want to have this conversation again. We have had like many time, but it would be a completely different beast. Like something also like internalizing arbitrage would be, I mean, it would kill a bit, I mean, the plan we have around that, but it would just completely change how things work and how we position the business, and that's something we can really revisit whenever it will be up for a vote by another operator if they wish. In that case, this will come with reducing the revenue contribution, but for now there is not even revenue to share, so I think it doesn't make sense to have this conversation. And what I think also is what it will be team, like, so team building on top of the core primitives. It's if we offer access to their product via the Rujira front end and via the THORChain front ends, we will always want to have a look into the contract to really like understand how it works under the hoods, to have them audited and other things. So we need this also this level of curation. Otherwise, like how like if you get, we'll probably like maybe we want to also integrate them in our bounty program, but that costs us money. Like every time there is a bug, we have to pay for it. So yeah, you need, I think for the foreseeable future, you need this curation, or then yeah, so you don't offer any of that in the THORChain or Ruji, but who knows? Like so like somehow this could also create issues. But I don't know, cannibal. It's risky. Like I don't see the upside of doing that now, and especially if we are in this vision of building this business effectively with this unified front end, all those apps that work together. Even people building on top, we want to integrate them as part of this UI and UX.
Yeah, perfect. I actually didn't want to spark the debate between how it should go. I was just wondering. I already made a piece long time ago, having you and Hans running the Rujira, and I think for me both ways made sense. Like having competition, it's the competition side, but as you mentioned, like spending a lot of time, money, effort for other teams who maybe even are not gonna deliver in the future. Yeah, it makes perfect sense. Thank you so much for your hard work. Thank you for Hans, although he's not here. The first liquidation was awesome. Keep up the good work.
Thank you.
I do have a question, Pragmatic Monkey, from Max Power. His question is, last time I tested depositing USDC on AVAX, it was hit by some slippage, significant slippage. Yes, I can use CCTP to do it myself to USDC Ethereum first, but this is unacceptable UX in my opinion. Any solution coming for that situation, especially for stables?
So yeah, I mean, right now, if you are doing a big deposit, the way the onboarding process, because we use the Ethereum version of USDC as the main version of USDC on Rujira, and that's because it's a pool with the deepest liquidity in terms of stable on THORChain. So whenever you deposit from another chain, from AVAX, you will do a base layer swap under the hood from USDC on AVAX to USDC on THORChain. On Ethereum, and if your deposit is large compared to the size of the liquidity pool on the THORChain base layer, there can be a bit of slippage, and CCTP is clearly a better, like more powerful solution. But CCTP, you like it has a big cost to integrate, and it's complicated, and especially like on THORChain, which is not an EVM chain. But there are alternatives to that. So I cannot go into too much detail because we have signed an NDA with the party, with Circle effectively recently. But we are looking at options there to do something similar. You will still have to do a swap from this. Let's assume we have a native version of USDC on THORChain. we'll still use the Ethereum version of USDC as the main one because, again, that's where most of the liquidity in the base layer pool of THORChain is. So if you want, for example, loans, you should borrow this version because then when your loans get liquidated, your collateral is sold into the, your BTC are being sold into a pool pair with USDC, which are still like 3 million or something into it. And you can absorb much bigger week via the virtualization strategies that you would if you use a native version that has no deep liquidity. So, but we could reduce the cost bigly by having a very deep consolidated pool of native THORChain USDC or equivalent to ETH USDC, and then you could use CCTP or there is another protocol from Circle called Gateway. Doesn't really matter, but you could use let's say CCTP to move from any chain which has CCTP to THORChain, and then do a swap for ETH. All of that package in one transaction for the ETH version of USDC, and your slippage would be much lower, especially if we have concentrated pools, concentrated stable to stable. We can make it very efficient. Of course, it will always be a function of the size of your deposit versus the total liquidity in the pool. But if you compare that to THORChain based layer pool, which use XYK, using XYK that price from 0 to infinity for stablecoin, it's obviously giving you like terrible bad price because it's almost the liquidity should be around 1. Like especially if you are trading USDC for USDC, your risk is the same. There's absolutely no reason to use XYK pool to price, and that's typically where it makes much more sense to have this liquidity pool moving progressively to the app layer.
Excellent. Okay, perfect. We are coming at the 2-hour mark. I am not seeing any more questions. Kenton, I am wondering if this is a good time to wrap. What do you say?
I think so. Yeah. We'll wrap up. Trying to make a pun with unwrapping a Christmas gift. We're going to wrap up this gift.
There you go, man. There you go. You know, upon reflection, guys, this is the last space. Oh, hang on. Max might have another question. Okay, I'm gonna let that one go, brother. You know, upon reflection, 2025, this is the last space, you guys. Very interesting year for sure. You know, it started largely with, well, I think it's just before that, right? I can't remember when Rujira had its issue, but you know, early in 2025 or roundabouts, that's when we all kind of got thrown together, right? And I'm sure on the Rujira side during that time, there's a lot of fear, a lot of ambiguity, a lot of concern. You know, THORChain came in, helped you guys, got you back standing. And then shortly after that, THORChain itself got royally kicked in the nuts with the THORFi implosion. And then you add Bybit on there. It's like we got kicked in the nuts. Someone then peed in our mouth and then set our body on fire. It was just an unbelievably terrible time, but we recovered. And I think, you know, upon reflection, the most amazing thing when I think about it is a lot of the reasons why both ecosystems had their blowups, had their failures is because we didn't have each other, right? Back in the day, I remember when THORFi was going on. I understood THORFi, I understood how it works, but I couldn't model it in my brain. I couldn't understand. I couldn't project it. I didn't understand the burn mint mechanism. Too complicated, too many variables. This I understand. I understand the app layer. I understand the vision now for the first time. I am so unbelievably excited for 2026 and beyond. This makes complete and utter sense. This is a great thing, you guys. And so I am just so privileged and happy to be doing this with you guys. I really feel like out of the entire blockchain space, it's crazy for me to say. I hope I'm not being narcissistic here or solipsistic or an over infatuation with my own self or this ecosystem, but I really think we're onto something. I think we're going to change the world. I really believe that. And most people aren't going to see it coming, but we are coming. So I want to thank you all so very much. I have made so many friends this year. It has been an absolute pleasure getting to know so many of you. And I sincerely hope that we can all get together at a conference soon, because I don't think I've met a single Rujiran in person yet, and that's a shame. And I got to meet Kenton soon too. I mean, that's ridiculous. I haven't met him yet. So I hope we can plan something, guys. It's been great. I'm having so much fun. I love every single one of you. Let's kick some ass next year. Let's get it done. I believe firmly we are going to do that. So rah, rah, heck yeah. All right, guys. Next space is going to be January 10th. We're going to have Edge Wallet with Paul. January 17th, we're going to redo our Thor wallet space because we didn't really give them a fair shot because it turned into a broader debate about marketing and the front end and stuff like that. So we're going to redo that. And then January 24th, we're going to have Let's Exchange on with Nadine, excuse me. Very excited about that. And then, of course, we will definitely have to revisit Rujira soon because you guys are building so quick. So, yeah, man, super excited. Before we close, Kenton, Pragmatic Money, any final words?
Okay, I go first. First, guys, Canton and you, Patriots, just big shout out. Honestly, you have been incredible this year. You keep showing up, doing those spaces every week. It has been amazing. I think it put us in this it helped a lot build a bridge between our two community and clear up a lot of points. And so I think it's amazing public service work. And thanks a lot for doing that. And yeah, I need to say it one more time because people asked for it. So about Emily's in Paris and all that with my French accents. People like when I say stacking or staking. I'm still not sure how I should pronounce that. But here you go, stacking, stake your Ruji, stack your Ruji, stack, stick, stack, stake, something like that. So that's for the French accent lover. And yeah, let's fucking go. It has been an incredible year. And the best is yet to come, really. I was telling about all the stuff I'm excited about for next year. I think 2026 is really the year where we are going to finally, by the end of the year, have all the core pieces together, and we can really start to scale and have fun. So this is all just the beginning, and tremendously exciting what's to come.
Hey, and I'm never going to give you issues for your accent because, you know, well, first, engine. I had the same problem. I used to talk with French people, language exchange partners. You know, use engine is what you say instead of engine. You know, it's okay. And you know, my French, you know, mon français est très mauvais. You know, I'm never gonna give you a problem, buddy. Okay.
This was actually very good.
I think both terms work: stack Ruji and stake Ruji. Right? You want to do both, right? So, killing two birds with one stone. Yeah.
Oh, okay. Yeah, they have different meanings, yeah. But they both exist.
Yes. Thank you guys. Thanks. It's been quite the year. And maybe just kind of remind everybody, you know, how our brains, all of our brains work. You know, recency bias is a real thing, right? We think that the future is going to be like the past. But you know, if you stop to think about it, you know that isn't true, right? We don't drive in the rear view mirror. You know, you look out the windshield and you look forward. And you know, the rear view mirror on THORChain and this year has been pretty bad, like you mentioned, Patriot. But if you look through the windshield and you look forward, I think it's pretty awesome. So you know, we have lots to look for next year. I'm really looking forward to starting a new year fresh. You know, we should have much more positive catalysts, you know, things, you know, to move THORChain forward versus set us back. And like, you know, this year has been a lot of like basically kind of like a giant reset, rebuild, incorporating Rujira and the Ruji team. You know, it's a lot of pieces are coming together, and I think next year we'll start seeing the final piece of the puzzle. We'll start seeing what that puzzle really looks like. So yeah, don't give in the recency bias, guys. Don't think the past is going to be what the future is, right? So lots is going to change for next year. So looking forward to being a part of that with you all.
That's a perfect way to end the space. Here. We are, the rearview mirror is not what matters. We're looking forward. Onwards, my friends. Well said, Kenton. Thank you so much, buddy. Thank you, everybody. I hope you all have a wonderful time this year. Merry Christmas or happy holidays with your friend, and have a happy new year. Spend time with your friends and family. Love you all. God bless. Bye now.